Hi, Norman Hallett here with your next 4-minute drill for traders. In our last drill, we started on the topic of capital preservation, and I advised you at that time to keep your risk on each trading position that you take on at or below 2%. Now, let's keep going on ways to preserve your capital as a trader, which again, I maintain is the most important focus a trader must have. Okay, to the next point. Keep your reward to risk ratio at a minimum of 2 to 1, and preferably 3 to 1 or 4 to 1 or even higher. In other words, if you're risking 1 point on a trade, you should be making on average at least 2 points. Think about it. If you have a trading plan that yields 50% winners, and you keep a minimum of a 2 to 1 reward to risk ratio, then by definition, you should be way ahead in the long term if you make twice as much on winners as you lose on losers. But the problem is that that statistic is deceptive. It's flawed. You see, when you set a parameter of 2 to 1 reward to risk as your minimum acceptable ratio, you're not taking into account a couple of things. That 2 part of the 2 to 1 ratio would be what you'd collect if your trade hit its maximum target. And how many times does a trade do that? If you're using a trading system that employs trailing stops to protect your profit, you'll get hit on a pullback a pretty good percentage of the time. I mean, think about it. So that 2 in the 2 to 1 ratio you were hoping to get winds up being 0.5 or 1 or 1.5 or whatever, but something less than 2. And how about slippage? 20 or 30% of trades are filled around the stopping price, but not at it, causing some capital leakage in there too. And even on protective stops, of course, that's true. What about when you trade a system that has you scaling out of positions as the market improves in your favor, which by definition means that you're not taking 2 times on your early exit positions in a scale out type of a process. For those who may be lucky enough to have a proven long-term trading system that yields 60 or 70% winners, your math will look different on the bottom line. But my point is that most systems are around 50-50. And if you're going to set some results goals in your trading, then taking most of your trades at a 2 to 1 reward to risk ratio, well, that usually just will not be good enough. I mean, isn't it funny how we always seem to take the full 1 on the loss side of the 2 to 1 ratio, but on the win side, we mostly don't see the full 2? Strange, huh? But true. You have to plan for this fact. Bottom line, you got to be patient and make sure you're mixing in a nice, healthy dose of 2 to 1 to 1s or 3 to 1s or 4 to 1s in your reward risk mix. Don't be so anxious to jump on the lesser opportunities. And you are going to have to be patient to wait for the better ratio trades. But do this, my fellow traders, and watch a simple 50-50 trading system yield some nice returns over the long term. Okay, that's it for this edition of 4-Minute Drill for Traders. Next week, we're going to continue our quest to preserve your trading capital. So until then, stay disciplined.